You are at a closing table and the loan officer slides a sheet across to you. $400,000 house, 80,000 down, which took you 6 years, 320,000 borrowed. And the number at the bottom, the one you pay every month for 30 years, says $2,129. Your sister Priya bought the same floor plan 2 streets over in 2021, same price, same down payment, same loan. Her payment is $1,349, $780 a month between you and your own sister for the same house. Nothing about that house changed. What changed was a decimal point on a government web page neither of you has ever looked at. My name is Nick. Today I'm going to show you why the whole planet is drowning in debt, why that decimal point is the most expensive number in your life. And one more thing. By the end of this, you will understand why you, the one paying more, might come out ahead. Let's start with what that gap costs you, because you should know your own number before we go near a trillion of anything. Trillion is where numbers stop being money and start being weather. Like, over the life of your loan, Priya pays about $165,000 in interest. You pay about $446,000, $280,000 of difference. Same house, same family, same down payment. You did not overpay. You did not negotiate badly. You are renting money in a year when money got expensive, and she rented it when it was nearly free. She did not out-negotiate you. She out-timed you by 24 months, which is not a skill, and I encourage you to raise that at every available family gathering. And this goes well beyond your kitchen, because the same thing happened to every government on earth at the same time. The world owes about $348 trillion. Governments owe roughly 107 trillion of it. Companies owe 100 trillion. Banks owe 76. And households, meaning you and Priya and everyone you have stood behind in a checkout line, owe about 65 trillion. Split that across 8 billion people and it comes to roughly $43,000 each, newborns included, which is a rough way to start a life. Here is what a trillion is. Count $1 a second and a million takes 11 days. A billion takes 31 years. A trillion takes 31,700 years. You would have started before farming was invented. Now do that 348 times. Hold that number loosely though. Serious institutions put the world total anywhere from 250 trillion to 348, depending what they count. When the experts disagree by $100 trillion, you are not looking at a measurement. You are looking at an estimate in a suit. And here's the part nobody puts in a thumbnail. Measured against the world economy, global debt has actually fallen 5 years running. The record total and the shrinking burden are both true at once, which means the thing crushing you is not the size of the pile. So if the pile is not growing faster than we are, why does your life feel like it is closing in? Because the rate on the pile changed. That is the whole video. And you and Priya are living in the two halves of it. To see why that matters, you need to understand something genuinely strange about where your money comes from. And I promise this is not the part where I tell you to buy gold. In 2014, the Bank of England published something remarkable. When a bank makes you a loan, it does not hand you money somebody else deposited. It types a new deposit into your account. Your loan creates the money, and roughly 97% of what you think of as money is not cash at all. It is bank deposits, which is somebody's debt seen from the other side. The honest caveat, because I will not insult you. Banks cannot conjure money infinitely. They are limited by capital rules, by interest rates, and by the problem of finding borrowers who can pay. But the core fact holds. In the economy you live in, your money and your debt are the same substance viewed from opposite ends, which means your $780 a month is going somewhere. Let's find out who is receiving it. His name is Hector. He is 67 and he is the reason your payment exists. He spent 40 years putting money into safe, boring places, and for most of the last decade he was punished for it. His savings account paid 0.4%. On $50,000, that is $200 a year, one nice dinner, and a tip. Every month, his bank mailed him what was functionally a receipt for nothing. Today, Hector's cash earns closer to 5%. Same account, same man, 12 times the income. And you are one of the people paying for it. Sit with that, because your whole life is downstream of it. Every dollar of debt on this planet is somebody else's asset. There is no such thing as debt without a creditor. When your payment leaves your account, it does not vanish into a hole. It moves toward Hector, toward pension funds, toward people you will never meet. The world is not underwater. It is split between those who owe and those who are owed, and the terms between you just got rewritten while you were busy living. So why borrow at all instead of taxing you or printing the money? There are honest reasons. Wars are sudden. Recessions need somebody spending when everyone like you has stopped. But mostly, taxing you is unpopular. Printing robs you through inflation, and borrowing does neither today. It pushes the cost onto a version of you that cannot yet vote, which is how America arrived at roughly $39.5 trillion in federal debt, near 99% of the entire economy, on track to break the record set right after the Second World War. Per American, about $116,000. Different measurement from the $43,000 I gave you earlier. One is federal debt. One is all debt on earth. Anybody quoting both in one breath is not doing math. They are doing theater, but the total was never the problem. Here comes the problem, and it is the same problem you have. Last year, America spent about $970 billion on interest. Just interest. Not roads, not soldiers, not hospitals, not one single thing you can walk into. $970 billion for the privilege of having borrowed in the past. That is the third largest line in the entire federal budget. Only retirement and healthcare cost more. It is bigger than the whole defense budget. It swallows roughly 19% of every dollar the government collects from you, about $7,300 per household per year. That is $2.8 billion a day. In the time you have been watching this, the bill grew by about $35 million. 5 years ago, that number was $345 billion. It has nearly tripled, and the debt did not triple. Here is the mechanism, and once you see it, you cannot unsee it. Government debt is not a 30-year fixed mortgage like yours. It matures constantly and has to be replaced. Last year, about $9 trillion of it came due. A quarter of the national debt, refinanced in a single year. So picture the government shuffling up to the refinancing window every month, handing over bonds issued at 1.5% and walking away with new ones at 4%. Over and over, it is a man rolling one credit card onto another, except the limit is $9 trillion and the teller is the entire planet. It is your problem exactly, with 8 more zeros and no option to stay in the old house. And I want to stop here because I think you already know what this section actually feels like. It feels like refreshing a rate website every morning the way other people check the weather. It feels like getting the raise you spent 2 years earning and watching every dollar of it vanish into a payment that did not exist when you started the job. It feels like doing refinance math on the back of an envelope for a rate that may never come back, then doing it again the next week anyway. It feels like the words starter home turning into a joke you no longer laugh at, and it feels like sitting across from Priya at Thanksgiving while she says she just bought when she bought, and being unable to explain why that sentence sits in your chest the way it does. 3 weeks before closing, you almost walked away. You had the email drafted to your agent, you did not send it. Hold on to that, because the reason you were right not to send it is not the reason you think. Because here is what I need you to hear. You did not miss a window because you were lazy or slow or bad at this. There was no window. There was a global repricing decided by inflation data, central bank committees, and bond markets on 4 continents. Nobody consulted you. Nobody consulted Priya either. She did not outsmart you. She was standing in a different year. The only difference between you is which price you were handed. You are not behind. You are paying full retail for something your sister got on sale, and the sale was never advertised. Quick pause, because the next part gets strange. I run a school community where we break down how to build income that does not depend on any of this, including how to grow a faceless YouTube channel from zero. Link is below. It costs nothing, and I'm in there answering questions. All right, back to it. Now let's kill the most popular myth you have been told, that America owes all this money to China. Foreigners hold about 24% of it, 24. 3/4 is owed to American pension funds, American banks, and the retirement trust fund that is supposed to pay you later. And the biggest foreign holder is not China. It is Japan. China holds under 2% of the total, its lowest since 2008, and has been quietly selling for years. So the real answer to who you owe this money to is mostly Hector, people like him, and quite possibly your own retirement account, which means the honest answer to who is doing this to us is partly us. Either deeply reassuring or Thanksgiving with Priya all over again, depending on your family. At this point, you are waiting for me to say the collapse is coming. I am not going to, because one country has been running your nightmare for 30 years and refuses to die. Japan's government debt is around 230% of its economy, higher than anything you have ever been warned about, and it has sat there since the 1990s. Traders predicted its collapse for so long that betting against Japanese bonds earned a nickname. They call it the Widowmaker because it kills the people who try it. So why is Japan fine? Because the debt is owned at home. Its central bank holds something like 46% of every government bond in the country. When your biggest buyer is your own central bank, nobody panics and sells. And because rates stayed near zero, Japan's debt service ran near 1.7% of its economy, against 3 or 4% for America. Japan owed far more and paid far less. Which should tell you everything. The size was never the story. The price was always the story, now the turn. Japan ended negative rates in 2024, and its long bond yields have been climbing since. Your closing table and their bond market are running the same script. And while we are demolishing things, here's the most expensive spreadsheet error in history. In 2010, two famous economists published a paper. Once a country's debt crosses 90% of its economy, they said, growth falls off a cliff. It became gospel. Finance ministers quoted it, austerity budgets leaned on it, which means it reached into real pensions and real hospitals. Then a graduate student asked to see the original spreadsheet because he could not reproduce the result. He got it, and the formula had been dragged across the wrong number of cells, silently dropping 5 countries out of the average. Corrected, the cliff was not there. Growth for high-debt countries came out near 2.2%, not negative. There is still a real link between heavy debt and slower growth, and the authors always called it correlation, not cause, but a decade of policy that reshaped millions of lives.